Hey guys, what's up? This is Francisco with Valorizo Capital, and today we're gonna do the weekly watch list video. This week is gonna be a short week. We had Labor Day, so we had an extra day to prepare. So right now, the weekly watches that I'm gonna bring to you, I have some of the in this weekly watch list. We're only gonna look at ETFs. I think that we're gonna gain a lot of perspective by watching the ETFs instead of the stocks in this one. So we're gonna go through some of the ETFs that I'm watching, and I'm also gonna share with you some of the ticker symbols that you can use to trade these ETFs using leverage ETFs, so that way you can also get more options for your trading as well. So remember that this video is for informational purposes only and is not financial advice, since it's based in my personal analysis and also my personal opinions. So let's start with the first name on my charts. This is USO. And let me just open the other screen that I have here on my right side so I can see a little bit of the volume. So here is USO. And for anyone who's new to the channel, the indicators that I have the TTM squeeze on the bottom part of my screen. And then I have the trend oscillator developed by Sam Shames as my second indicator right there. And then the lines that I have here, I have the Keltner channels. I use a 2 ATR. I use a 2 ATR from the 21 exponential moving average. And then I have the purple line is the 50 daily moving average. I have the 21 exponential, which is the blue line. I have the 8, which is the orange exponential moving average in the screen. And then I have the 200 daily, which is the pink line on my screen. So first name on the list is USO. This one you can trade with UCO, that is the leverage ETF, the bull leverage ETF, or you can use SCO. That's going to be the short leverage ETF for this instrument in particular. Now, why USO, right? Because a lot of people are watching USO and this just looks like a bunch of chop. And yes, it does look like a bunch of chop, but usually from these consolidations or distributions, we tend to see a really nice move, a really nice break when it happens. So I do want to keep this one on my watch list. And as you can see here, these are really wide ranges. And when we have wide ranges, it's more common that we're actually seeing distribution rather than accumulation. That's just a simple way to look at the patterns of price. What is the trend oscillator telling us? The trend oscillator is telling us that we actually had a failed breakout right here. You can see that we tried to break that bearish structure above 76.97. We tried to do it right here, but we actually failed. And you can see that from failed moves come really fast moves. Now we're holding that 200 daily moving average. And what I'm looking here to short the USO, I have this 0618 retracement level measured from this high to this low. You can also see that we actually broke the channel that we were trading in USO. And what I'm looking for is to see that we can actually get a retest of that daily 50. If we can actually get a bounce from this 200 to this daily 50, I will see that as an opportunity to manage risk in a short position. So what I'm looking for is actually, we already have a move to the downside. Can we get a retracement into this 0618 level? Somewhere around this level right here, somewhere around 74 to 75. If we can get that, I'm going to be looking to short this using the 76.97 as my stop, and then looking for continuation to the downside, and then finally a breakdown from this consolidation, this distribution pattern that we have here. And if we actually have a breakout, I think that we are gonna see more of a continuation to the downside, and it's gonna offer a really nice leg lower, tradable leg lower in this name. Now the next one that I have SMH, and some of the names that you can use to trade SMH, if you're not familiar with it, you can use SOXL for the long side, or you can use SOXS for the short side in this product, which is SMH, which is the ETF for the semiconductors. Now we actually had a really nice move. You can see right here that we're trading below that bullish structure level, which was 226.73, which was this low right here. We actually came to support. We have a rally that went into that upper side of the channel and that 21 exponential moving average. But you can see that I already had my bottom, my sell signals active. These sell signals trigger when we have 2 days below that EMA and then 2 days below that 50 line. I had those both of those sell signals active, meaning that there was a high probability of continuation to the downside. You can see that we came into resistance and we actually had a pretty strong break from bullish structure. So as long as the price continues to trade below 226, I'm only going to be looking at the short side of this market, which is SMH. Now you can see that we are already extended. That's the 1618 extension measure from this swing to this swing right here. We stop right there. We actually print a hammer candle. So I'm expecting kind of a retracement here. Now, I have the 0618 retracement here measured from this high to this low. If we happen to get a rally into that 0618 level and this 21 exponential, I think that's going to be a perfect place to manage a short position using this 226.73 as my covering guide, and then look for more continuation to the downside in SMH. Now, the next name that I have here, I have ITV, which is the home construction ETF. And a beautiful way to play this, you can use the leverage ETF, which is NAIL, N-A-I-L. And basically, if you see this chart right here, you can see that it's pretty similar to the one that we have in SMH. You can see that we actually had a failed breakout right here. You can see that price was actually going higher, but the momentum was already going lower in the trend oscillator, which is something that I love about the trend oscillator, because it helps me to determine the probability, right? Because we manage probabilities. What is the probability of the breakout actually continuing to the upside? So you can see that we actually trended lower. The breakout failed. I have 2 of my sell signals are already active, meaning that there's a high probability of continuation to the downside. You can see that we found resistance at that 21 exponential moving average, and we had a break of the bullish structure below 59.06. And as long as price continue to trade below 59.06, I want to continue to trade this market to the downside. And then I'm looking for a retracement, right? Let's see if we can get a rally to this 0618 level, measured from this high to this low right here. If we happen to have that rally, that will come somewhere around that 50 daily, the 21 exponential, that 0618 retracement, and also that upper side of the channel, I think that's going to be a beautiful place to manage risk and then continue to trade this market to the short side, using somewhere around 59 to 60 as my covering guide in this market. Then I have the QQQs. And a beautiful way to play the QQQs, you can trade the QQQs by using the TQQQ. That's the bull leverage ETF, but you can short it as well, or you can just get long the SQQQ. That way you can play this market to the short side by getting long the SQQQ, or you can short the TQQQ, whatever feels more comfortable for you. Now, why I'm looking at the QQQ as the short for the short side is because we also had a break of a structure. We broke below that 315.42 level. You can see that we did it in a pretty bearish candle on this day right here. And you can see that I already have my 2 sell signals active, meaning that there's a high probability of this continuation to the downside. And what I'm looking for, right, I don't want to short it right on support, right? Because the 0618 level that I have right here is actually measured from this low right here to this high right here. So this is going to be a strong level of support, at least in the short term. So I'm expecting a rally back into resistance. Also, I'm expecting a rally because you can see that we actually kind of tested the lows and we are starting to get a little bit of divergence, not exactly divergence, but we're starting to see that the momentum is starting to go a little bit to the upside, meaning that there's a probability that we're going to see a snapback rally. Now, what is the level that I'm watching to short? I'm looking at this high to this low right here. This is the 0618 level. If we happen to get any rally to that 0618 retracement level, or the 21 exponential, which is this light blue MA right here, somewhere around 309 to 310.50. That's going to be a perfect spot to short. Maybe perhaps you can use 315.42 as your definite covering guide, but I'm going to be looking at this level to short, and then a continuation to the downside in the QQQs as well. And then finally, well, I have two more names for you. Then the next one is going to be XLV, pretty similar chart. You can see that most of these charts look pretty similar, but that's the beauty of it, right? Because these patterns are actually really easy to trade. Why? Because we had a break of a structure right here, right? You can see we had a break of a structure right here on XLV. So you have a pretty clean level to short, and also you have a pretty clean level to exit. So as you can see here, similar to the QQQs, from the low that we had right here. Let me just zoom out a little bit. From the low that we have right here into the high that we have right here. This is the 0618 retracement that came right here. That level is acting as support. So I'm expecting a bounce here, some kind of bounce. Now, where the bounce is gonna come, I don't know. But based on my analysis, there's a high probability that we're gonna see a bounce into the 0618 retracement measured from this level to this level, and then into that upper side of the channel, and also that declining 21 exponential moving average. If I get my short somewhere around here, then I can use this 128.99 level as my covering guide, or I can also use the 50 daily, depending on how much risk I apply, how much risk I position into this trade. Now, a beautiful way to play this, you can use the ETF Cure. This is the 3x leverage ETF for XLV, and that one tends to move a lot, and is a great way to participate in XLV by just watching at the ETF and not having to look at the entire market of all the healthcare stocks and then looking at the best one. You can just trade the sector, which is a really easy way and an amazing way to play these setups. And then finally, I have TAN. A lot of people are talking about TAN in a bullish way. I think TAN is seeing a lot of distribution. You can see the head and shoulders pattern right here. But most importantly, more than the head and shoulders, I'm already seeing a lot of divergence, right? You can see that the TAN right here, TAN make a higher high. The indicator was already making a lower high. You can see right here that TAN was testing this high, but the indicator, the momentum indicator continued to make a lower high. You can see that I have both of my sell signals are active. This sell signal actually triggered on Friday. However, I'm not looking to short right here, because shorting right here is going to be shorting right into support, which is this 50 daily moving average. I don't want to short right into support. So I'm going to be waiting to see if we get a rally in TAN next week. Any rally into that 21 exponential moving average could be an option, or also into the 0618 level, which is measured from this level to this level here. If we happen to go to that 85.95 level, which is where we actually got these selling candles, that will be a beautiful place to start a short position. And then I think that we can actually see TAN moving all the way down to close that gap that it had opened when we actually had this breakout to the upside. So those are the names that I have for you, and a way to play TAN. I usually just trade for TAN. I don't think that there's a leverage ETF, so I just basically use TAN. It usually moves pretty significantly. I think that let me see right here. Yeah, the ATRP, which is the average through range percentage, is somewhere around 3.63%. So I think that's acceptable for a trade. So those are the names that I have for you guys. I think that the market is pretty bearish right now, so I'm just focusing on bearish setups. Basically on all the things that I show you are bearish setups. However, we don't want to short them right now because they work the same as long setups, right? You don't want to short them when they're extended. You want to short them when they're at support, right? When they're at resistance, which is basically like buying something at support. So I already gave you the levels. I also share with you what are the targets that I'm looking at. So I hope that this analysis was helpful for you. That way you can also add some of these names if they also fall into your system, right? If they agree with your system, you can add them to your watch list. So let me know what you think, and thank you so much, guys, for watching the video. I wish you the best of luck for next trading week. Thank you, and bye bye. Peace.